If you're wondering what's been going on in the Orlando market here in the summer of 2026, I'm going to dive into it. Let's get started. Hi, my name's Chad. I'm with the Dreamtown Homes team here in Orlando, Florida, brokered by LPT Realty. I like to break things down in a very simple, easy way so that everybody can understand and get the most value and information as possible so you can make the best informed decision for yourselves. That being said, let's dive in. So this is the Orlando Real Estate Rapid Market Update for June 2026. Keep in mind that all the numbers that we get are usually lagging by a month. So yes, we are currently at the end of July, and these are the June numbers. I like to break this down in simple terms, like I said. So what is going on in Orlando? The big picture is that we have a steady market, a healthy market. It's still tilted towards sellers, but it is softening. Prices have been drifting up slow and steady. Sales have been rising continuously for 5 months straight, and the market mood is not crashing, it's not booming, it's pretty flat. So after years of chaos, we have a pretty typical normal summer. The supply, we're sitting at 4.1 months of inventory. What does that mean, by the way? It means that if everyone stopped listing today, inventory would run out in 4.1 months. We measure a balanced market as 6 months of inventory, so still not quite there. Orlando is still favoring sellers on paper, but this is the softest that it's been, and it's slowly drifting towards a buyer's market. We've had almost 1,000 homes for sale, which is basically flat from previous months, and almost 4,000 new listings, which is up 4.6% versus this time last month. The median sale price across all properties in Orlando was $416,308. That is up 2.3% versus May and up 1.6% versus June this time last year. So what does that mean? It means the prices didn't crash here. They also did not spike. They did drift up just a little bit. And honestly, that is what we would want to see in a healthy market. Now, we do have to consider there's different property types, especially here in Orlando, 2 different markets. If you're looking at single family homes, that median sale price is a bit higher. You're looking at $451,992. If you're looking at condos or townhomes, it's a little bit different of a story, a bit cheaper, around $301,057. And that's a $150,000 gap here. And that gap is typically the story here for first-time buyers. When it comes to the purchase price, condos and townhomes can see appealing and a realistic way to get into home ownership. However, you got to be cautious here. Not every townhouse is a condo and often might fall under the single-family umbrella and be more, or they may fall as condos and fall within this price range here. Condos come with a whole other bag of issues and additional costs and fees and considerations. Don't just run into it because it's affordable or it appears affordable, because there are going to be a lot of things that sneak up and blindside you. Trust me, I've lived through it myself, so I've experienced this firsthand. You just have to be careful. I'm not trying to scare anybody away from condos. They can make sense. You just really have to know all the things that go on with condos. Totally different story than a single family home. Speed and momentum here. We've got 2,929 homes that sold. This is an 8% increase over May. It's the 5th straight monthly increase that I mentioned before. 62 days average on market. That's down from 66. And what that means is, again, we're not in a crashing market here. We would see a steep drop off. This is actually the opposite occurring, where more buyers are stepping in month after month, reducing that time on market. Real quickly, I want to talk about a shift that not a lot of people are talking about, and that is that Florida insurance is finally appears to be coming down a little bit. Citizens, which is the state-backed insurance company, filed its first rate cut since 2015. So that's the first rate cut in 11 years. State Farm filed for a 10% reduction, and we saw 330,000 policies statewide actually see decreases in their premiums. Now, Orlando's cuts here were a little bit smaller than our friends on the coast, but for many years, especially the last 2 years, a lot of times insurance did kill a lot of deals, and that pressure seems to be easing. Now, This is a little bit, right? I like to compare it to if you shake up a soda bottle and you just kind of crack the cap and it kind of hisses, you're just slightly relieving the pressure. There's still a lot of problems, still a lot of things that need to be fixed, still very unaffordable for many people, but we're starting to see a little bit of pressure release. Not enough, but at least it's starting to move in the right direction. Rate and affordability, we're looking at mortgage rates around 6.5%, 6.6%. That's for the 30-year fixed rate mortgages on the latest readings. These are principal and interest only figures I'm about to go over with you here, so they do not include taxes, insurance, HOA, any other fees like that. For first time entry, if you're looking around $360,000 home, which you can find, they might need some work. They're not going to be big homes, but they do exist. You can go as low as 3.5% down on a conventional if you're a first-time home buyer, or 3% FHA. They may not qualify for FHA though, given their condition of the home, depends. But you're looking at around a $2,180 a month payment. Again, that's principal and interest only. You have to add on your insurance and your property taxes. That's going to be very different per properties. We're not estimating that here. If you're looking at buying around the median price in Orlando at $416,000, this time let's assume that you're doing a 20% down payment, then your price is looking about the same, $2,123 a month. Again, that's P&I only. And if you are a move-up seller looking to sell your home and getting something a little bit bigger, maybe you buy something for $550,000, again, using 20% down payment, taking that payment or that equity from the first home, rolling it into the second home, you're looking at a P&I of $2,804 a month. Again, these are simply estimate figures just so you kind of get an idea. You need to factor in all of your costs, so yours will change and they will be different per property, but it should give you a rough idea. You might notice here, this is about a 108-month swing for half a point move in interest rates. So if interest rates go down 0.5%, you save about $108 a month. And if they go up another 0.5%, you're going to be spending an additional $108 a month. So for buyers, what does this mean? Well, the leverage is slowly moving your way. You have more choices. Inventory has been building month over month. You don't have the kind of bidding wars that you had, almost no bidding wars that you had in 2021. Occasionally you might come across one here or there. I have seen and been a part of a few of those deals in the past 6 months, so it's not completely out of the picture, but it's nothing like 2021. Many times you will be the only buyer on the table at any given time. Because of that, sellers are willing to negotiate again, negotiate more, offering repair credits, closing cost helps. These are things that are back on the table that in 2021, sellers weren't considering at all. They didn't need to. And then homes that have been sitting on the market a long time, homes that were overpriced, these are your openings. Sellers might be willing to negotiate because they're feeling the pressure of the home sitting. The key here is that well-priced homes in the best neighborhoods are still moving quickly and will likely be less than that 66-day average, but you do have time to be thoughtful and calculated on making your purchase. For sellers, what does this mean? Well, it means if you price it right, you're probably going to do just fine. The demand is real. Again, 5 months of rising sales. Prices are near all-time highs still, but this is not 2021. Overpriced homes are sitting on the market those 66 days or longer, and then you're ending up making price cuts, and that doesn't look good to buyers. If you price it right, it shows well, you're looking at selling within those 66 days or maybe sooner. It's a simple formula, but it does work. The one thing I don't recommend is chasing the market down, pricing it high, trying to see, okay, well, we'll just try to get as much as we can right away. In this market, I have not seen that strategy work once. It works in a different market, but this market's different. It's just not a good strategy this time. And that means it's becoming a very expensive mistake that sellers are making, and it's completely avoidable. The bottom line here, the market is almost balanced. Yes, home prices are very high, but when we're looking at the data, we're considering this healthy. There's opportunity on both sides, which is very true. Prices are drifting up, demand is real, and the market is rewarding people who are making smart, calculated, educated decisions. If you're curious about what your home is worth, or you're buying or want to buy and you're wondering what your buying power is, you can comment market. I'll send you the full June report, or you can book a free 15-30-minute call with me. I'm happy to help you break down your numbers and just let you know and see where you are and help you come up with a plan. Doesn't mean you're ready now. It doesn't mean you're ready next year, but having a plan is where it starts. I'm happy to help you with that. My data sources for this information was the Orlando Regional Realtor Association and Stellar MLS for June 2026. Thanks for watching, and I'll see you in the next one.